Hello friends, there's a document sitting inside a free government website right now that a significant number of Americans receiving Social Security have never once looked at. Not because it's hard to find, not because it requires any special knowledge or legal background, simply because nobody ever told them it existed, and nobody ever explained why it matters as much as it does. I want to be straightforward with you about what this document is, what's inside it, and most importantly, why the people who actually sit down and go through it carefully are the ones who end up with more money in their pocket every single month for the rest of their lives. This isn't about a loophole. It isn't about a strategy that only works in certain states or for certain types of people. It's about a basic document, a free document, that takes about 5 minutes to pull up, and for a lot of people who actually look at it the right way, it leads directly to a larger monthly check. Not after some complicated legal process, not years down the road, a larger check starting as soon as the correction goes through for the rest of their lives. I've seen this play out for people adding $200, $300, even $400 or more to what they receive every single month. And the reason most of them didn't have that money before was simply that nobody told them this document existed or explained what to look for once they had it open. I'm going to walk you through exactly what this document is, where to find it for free, how to read it the right way, and most importantly, what specific thing to check inside it. Because just pulling the document isn't what changes anything. It's knowing exactly what to look for once you have it in front of you. That's the part most people miss. That's what this video is entirely about. Stay with me through the end, because the specific thing I'm going to ask you to check, the part that actually moves the needle on your benefit, is something almost nobody explains clearly. And once you understand it, it changes how you think about your Social Security entirely. Before we get into it, subscribe to this channel right now and hit the bell icon. I cover exactly this kind of information here. Straightforward, practical, no-nonsense things that directly affect how much money lands in your account every single month. People who subscribe don't miss this stuff. People who don't subscribe find out about it years later, sometimes after they've already left thousands of dollars on the table permanently. Subscribe right now and let's get into it. The document is called Your Social Security Statement. It is free. It lives inside an account called My Social Security at ssa.gov, and if you've never set one up, it takes about 5 minutes to create. Once you're logged in, your statement is right there waiting for you. You don't have to request it. You don't have to wait for it in the mail. You don't have to call anyone or go to an office. It's sitting there right now, fully available, completely free, and it contains something most Americans have genuinely never laid eyes on: their complete earnings history. Every single year they ever worked and paid into Social Security, going all the way back to their very first job. Now, I want you to think about that for a moment. Every year, every employer, going back decades, the number that was reported to the Social Security Administration for each of those years is sitting right there in your statement, line by line. And the reason that matters, the reason it has the potential to directly increase what you receive every single month, comes down to how Social Security actually calculates your retirement benefit. Because most people think they understand how their check gets calculated, and most people are wrong about this in a way that costs them real money. Social Security does not calculate your retirement benefit based on your most recent years of work. It doesn't look at what you made in your final decade and call it a day. It doesn't take a simple average across your entire career. What it actually does is take your 35 highest earning years, adjust each one of those years for inflation to account for the fact that $1 in 1987 is not the same as $1 today, average those adjusted numbers together, and then run that average through a specific formula to produce your monthly benefit amount. That's it. That's the entire engine behind your check. That 35-year average is everything. It is the single most important number in your entire Social Security calculation, and the only place in the world where you can see the raw data behind that number, year by year, going all the way back through your career, is inside your Social Security statement. Which means if there is anything wrong with that data, anything at all, your benefit is wrong. And it will stay wrong until you find it and do something about it. Here is where things get important. And I want to explain this part as clearly as I possibly can, because this is the part most people have never heard before. The earnings data in your Social Security statement didn't come from you. It came from your employers. Every year, every company you worked for submitted payroll reports to the Social Security Administration, and those reports are what built your earnings record year by year over your entire career. And here's the thing about that process. It is not perfect. It has never been perfect, and the SSA itself acknowledges that errors in earnings records are not rare. Sometimes an employer submits the wrong figure. Sometimes the number they report is significantly lower than what they actually paid you. Sometimes a year shows up in your record as 0 when you know for a fact you were working and earning money during that time. Sometimes an entire block of years is off, particularly if you worked for a small business that handled its own payroll manually without professional accounting support. Every one of those errors pulls your 35-year average down, which means every one of those errors makes your monthly check smaller than it should be. And according to the SSA's own figures, a single year of missing or incorrect earnings reduces your monthly benefit by approximately $100. That is $1,200 a year. Over a 20-year retirement, one wrong year sitting in your record uncorrected costs you $24,000. Not because of anything complicated, because a number was recorded incorrectly, and nobody ever caught it. The SSA does not catch these for you. That is the part I really need you to understand. There is no automatic review. There's no system that cross-references your employer's records against what was submitted. There is no alert, no letter, no phone call that says your record may contain an error and your benefit may be lower than it should be. The data goes into the system, the benefit gets calculated using whatever data is there, and unless you open your statement and compare it against your own records, those errors sit there silently for years, decades in some cases, quietly costing you money every single month. So, who is most likely to have something worth finding and correcting? I want to walk through this carefully because there are specific groups of people who are significantly more likely to have errors in their record, and if you fall into any of these categories, pulling your statement isn't just a good idea, it may be one of the most financially valuable things you do this year. The first group is anyone who worked for small businesses during the 1980s and 1990s. Payroll reporting during that era was handled manually at most small companies. There were no automated systems cross-checking numbers. A business owner or office manager was entering figures by hand and submitting them to the government. Mistakes were far more common than they are today, and many of those mistakes never got corrected because nobody ever went back to look. The second group is anyone who was ever self-employed, ran their own business, worked as a freelancer, or took on independent contractor work at any point in their career. When you're self-employed, your earnings get reported through your own tax filings, specifically through Schedule SE. And errors on those forms, miscalculations, missing filings, forms that were submitted but not correctly processed, can result in years that either don't appear in your record at all or appear at a significantly lower amount than what you actually earned and paid self-employment tax on. If you've ever had any period of self-employment in your career, this is something you need to check carefully. The third group is people who changed jobs frequently. Every job transition was another opportunity for incorrect data to enter your record. A new employer setting up your account, your first paycheck at a new company, your final paycheck at the one you left. Each of those transition points was a moment where a mistake could have been made. People who had 5, 10, 15 employers over the course of a career have 5, 10, 15 times as many potential points of error in their record. The fourth group, and this one surprises people when they hear it, is women who change their last name after marriage or divorce without updating their SSA records. When the name on file with the Social Security Administration doesn't match the name an employer submitted on your payroll report, those earnings can end up unassigned. They go into a holding file somewhere in the system, not credited to your record, not counted toward your benefit, sitting there unattached to anyone. If you've had a name change at any point and you're not certain your SSA records reflect that correctly, this is worth investigating specifically. Now let me explain one more piece of his that catches a lot of people off guard, because it's not something most people think about when they think about their earnings record. If you have fewer than 35 years of reported earnings in your Social Security record because you took time away from work to raise children, because you went back to school, because you spent years in a job not covered by Social Security, or for any other reason, the SSA fills those missing years with zeros. Not estimates, not averages, zeros. And those zeros go directly into your 35-year average and pull it down. Here's the part that matters. Sometimes those years aren't actually empty. Sometimes you worked during that period. Sometimes you had income, paid your taxes, and your employer submitted a payroll report. But something went wrong in the recording process, and that year shows up as zero in your record when it shouldn't. Finding one real year of earnings that was recorded as zero when you actually worked that year and getting it corrected can add $50 to $150 a month to your check. Finding 2 or 3 years like that can add significantly more. And the only way to find them is to look at your statement, compare it year by year against your own records, and identify the discrepancies yourself. I want to give you a real example of what this looks like in practice because I think it makes everything concrete in a way that abstract numbers don't. A man who had spent 3 years working for a small construction company in the late 1990s pulled his Social Security statement before he retired and started going through it carefully. When he got to those 3 years, the earnings listed in his statement were roughly 60% of what he had actually been paid. The company owner had handled all the payroll himself, submitted the reports by hand, and the figures he reported were significantly lower than the actual payroll. The worker had no idea this had happened. He had no reason to suspect anything was wrong, but because he went through his statement line by line and compared the numbers against his W-2 forms from that period, he found it. He filed a correction with those W-2s as documentation. His monthly benefit went up by more than $340 every single month for the rest of his life. That's over $4,000 a year, from one afternoon of careful document review. He didn't hire a lawyer. He didn't go through a complicated process. He found an error, submitted the documentation proving what his actual earnings were, and the SSA corrected the record. That's the whole story. Let me walk you through exactly what to do, step by step, in plain language. The first thing is to go to ssa.gov and create your My Social Security account if you haven't already. It's free. It takes about 5 minutes, and you'll need a valid email address and some basic personal information to verify your identity. Once that's set up, log in and find the earnings history section of your statement. It's clearly labeled and easy to locate. What you'll see is a list of every year going back to when you first started working, with a dollar amount next to each year representing what was reported to the SSA as your earnings for that year. Your job is to compare those numbers against your own records. W-2 forms, old tax returns, pay stubs, anything you've held onto over the years. If you don't have your old W-2s from decades ago, don't worry yet. I'll come back to that in a moment. What you're looking for as you go through this list is years where the number in your statement is noticeably lower than what you remember actually earning. Years that show a zero when you know you were employed and earning income during that time. And years that might be missing from the list entirely if your record somehow skipped a period when you were working. Go slowly. Don't rush through this. The years that matter most to find are your highest earning ones, because those are the years most likely to be part of your 35-year average. An error in a year where you earned good money has a much larger impact on your benefit than an error in a year when you were just starting out or working part-time. So pay particular attention to your prime earning years and make sure those numbers look right. If you find something that doesn't match, a year where the number is wrong, a year that shows zero when it shouldn't, a discrepancy of any kind, the form you need to submit a correction is called a Request for Correction of Earnings Record. It's available directly from the SSA, and submitting it is not complicated. You fill out the form and you submit it along with documentation proving what your actual earnings were. The best documentation is W-2 forms, but here is something most people don't know, and it's genuinely important. If you don't have your old W-2 paperwork, the SSA can pull copies of W-2s going back to 1978 at no cost to you, as long as the purpose is correcting your Social Security earnings record. You do not have to have kept every tax document from the last 40 years in order to fix an error. That option exists specifically for this situation, so even if your file cabinet doesn't go back to 1989, that is not the end of the road. Once you submit your correction with documentation, the SSA typically processes it somewhere between 10 and 90 days, depending on the complexity of the case and how much verification is required. And once it goes through, your benefit is recalculated using the corrected data, and the higher amount starts showing up in your check going forward. One final thing I want to make sure you understand before you go do this. There is a 3-year window that applies to correcting very recent errors, but older mistakes, errors going back 10, 20, 30 years, can still be disputed and corrected with the right documentation. Do not look at your statement, find an error from 1991, and assume that it's too old to fix. If you have the documentation proving what your actual earnings were, it is worth filing the correction. The SSA handles older corrections regularly. The age of the mistake is not what determines whether it can be fixed. The documentation is what determines it. Your Social Security benefit is built entirely on decades of earnings data. Every single year on that list contributed to the number that shows up in your check. If any of that data is wrong, if 1 year is low, if 3 years are missing, if a block of time is recorded at a fraction of what you actually earned, your check is smaller than it should be. It has been smaller than it should be this whole time, and it will stay that way for the rest of your life unless you go find it and correct it, because nobody is going to find it for you. The SSA will not find it. Your financial advisor probably never mentioned it. Nobody is coming to tell you that your record might have an error and your benefit might be wrong. The only person who can go look is you. And the document that lets you look is completely free, fully available right now at ssa.gov, and takes about 5 minutes to pull up. Going through it carefully, year by year, comparing the numbers to your own records, is one of the most financially valuable things you can do for your retirement income. Most people spend more time checking their grocery receipt than they have ever spent looking at the record that determines their income for the rest of their lives. This is worth an afternoon. This is worth a Saturday morning at the kitchen table with your old tax files and a cup of coffee. Go to ssa.gov. Create your account if you don't have one. Open your statement. Find the earnings history, go through it year by year, compare the numbers. If something doesn't match, pull the correction form and file it with your documentation. That is the whole thing. It is not complicated. It is not time-consuming. And for a meaningful number of people watching this right now, it leads to a larger check every month for the rest of their lives. Subscribe to this channel and share this video with someone you know who is on Social Security or getting close to retirement. Most of the people who need to hear this haven't heard it yet. Be the person who tells them.